Good day, all. Ira Epstein of Linn Associates with your agriculture update, and this is for Tuesday, the 9th of April, 2019, just around 4:15 p.m. Central Daylight Time. Well, you can see the stock market down because the Trump administration has decided to open salvo on Europe. Now, you would have thought maybe they'd get China done and out of the way before they do this, but nah, now we're going to have fights on another front that's picking up momentum. Market did not like that at all. You saw, if you'll take a look, the gold got a bid, the dollar down a fraction. Bonds and notes certainly got bids. In the grain markets, well, there's nothing bullish about that. If anything, you saw pork get hit. We went limit down in the hog market. We had today the crop reports of world supply and U.S. Supplies. If you saw anything, you saw that the bean supplies are very burdensome in the U.S., and the question is, how do we get rid of this product? So the market today is still sitting just under the $9 level. When we take a look at a weekly area chart of closes, you can see how the market's having trouble here. This is 902.5, the 18-week moving average of closes. You're looking here at a daily bar chart, and you can see how the market's trying to break out a bit to the downside. The pattern today confirmed lower highs, lower lows. That is usually associated with a bear trend. The risk to break that pattern is to get back over 903.5. The market's closed under the 18-day moving average of closes in red. When that occurs, I define that as bearish. Here's why. I call then the bias down. The swing line is already down. Therefore, you've got the trend down, the bias down. Where could support come in? We are fairly far away from the Bollinger Bands, which have been offering some level of support in the past. That number's around 886. Momentum is sort of flat right here. So my guess is, and that's all you can say, is that with the trend down, the bias down, and momentum at least flat, the bears have control of the market. They'll probably try to defend their position in that $9 mark. What would upset the apple cart is getting over 903.5, and barring that, the question is, will the market work lower with the current fundamental set that we have? In the meal market, you also confirmed today the lower highs. However, unlike soybeans, you have higher lows. Do you see that right here? So you have a market that's sort of narrowing in like that, and it's happening against the 18-day average of closes. Take out 311 and not take out this last break low of 307.10, and you could end up with higher lows, higher highs, which would give the bulls control of the market, putting into play the 100-day average of closes as potential resistance. Break through 307.10 and keep this 311 in place, you have lower highs, then you have the lower lows, putting into place the potential for 304.60. Battleground still 310.30, the 18-day average of closes. In soybean oil on the way up, we went up to the 100-day average, slipped back, and now we're sitting here fighting a battle in the neighborhood of the 18-day average of closes. With today's settlement, you have a pattern of higher lows, higher highs. Therefore, trend up because you closed over the 18-day average, bias up, momentum grudgingly pushing higher still. What is the risk to those long? Not to take out 28.78, yesterday's low, because what that would do is it could set up the pattern of lower highs, then lower lows, suddenly putting into place 28.35 as the next support level, the lower Bollinger Band. In the corn market, the trend remains to the downside. Lower highs, certainly the lower lows have been in place, but you are oversold. Will the market go for the last little bit to hit the Bollinger Band again like it did here and then bounce? Don't know. And by the way, you don't have to bounce, but most times you do. Get up to the top of it, you break away, get down to the bottom of it, and sooner or later you get a bounce like you did here, like you did there. You can accelerate declines, you see that, but more times than not, in fact 95% of the time, you'll trade within the black bands. In the wheat market, you established a new downtrend today by putting in lower highs, lower lows. Now the simple fact is the market got very close to the lower Bollinger Band of 455.5. Will it hit it? Don't know, but momentum down, Now the trend down, the bias down since you closed under the 18-day average. On the current pattern, you'd have to get through yesterday's high, which in the market was 471 to negate that pattern. But as I define it on these charts, nothing can turn the market bullish. You can't end up with you can't end up with a higher low, higher high. You could end up with a higher high, but you still have the lower low. In the sugar market, you've been trading in a very narrow band, the upper band to the lower band, and they keep narrowing in. I think you can see that. We've been hitting very often this 18-day average going up to the 100-day in green, then falling back to it. You are in an overbought condition as defined by the slow stochastics having a reading over 70. That's how I teach that. Could the market reach up for the upper Bollinger Band? Most certainly, because the trend is up, the bias is up, but you have to remember you're already in overbought condition. In the coffee market, we had this recent attempt to get up and stay over the 18-day average. If you look back, you hadn't done that since February. You had one move at it, and then all of a sudden you came crashing back, and you're still coming back down. This is a market that stepped out of the downtrend. The problem is it's not able to get a trend really going. Right now, you've got the higher lows, you've got the higher highs, but you need to settle over that 18-day average of closes, and you haven't done it. Should the market take out yesterday's low, and that number was 92.05, you could end up with lower highs, lower lows, but then you're right into the Bollinger Band. And remember, you'll trade within those bands 95% of the time, so often the first challenge of the band results in, if people are bearish, that's where they're taking some money off, bullish, money off there. You need to close over the 94.45 level, let's call it 94.50, in order to say that the market is turning its trend back to the upside. The cocoa market has what we call an embedded reading. Embedded readings occur when the slow stochastic readings are staying over an 80 level more than several days in a row. And you've got that. When that occurs, even if you take out a previous break low like you did here, this is the ruler of the chart. And until that's lost, what I teach is the market will try to find its way to finding support on breaks and trying to rally back up on you. In the cotton market, you're now on the verge of the slow stochastics trying to what? Break down. If we go to yesterday, both numbers over 80. Both over 80 the day before, but not the day before. So today could have been the third day where it could have embedded. It decided not to. That puts into play an outside day down. Could the market embed from here? No, it can just stay overbought the way that I teach this, and support could come in at the 18-day average. A bit of a difficult chart because it's overbought. In the cattle market, one of the things that we talk about often in these particular videos is how markets work around this 18-day average of closes. And as you can see, you've broken down, tried to get over it. It's just back and forth action. The market does have a pattern of higher lows and higher highs, which is bullish. However, the momentum has not crossed and closed over the 18-day average, so the two fight each other, and you have a market that is right now in oversold condition. In the feeder cattle market, you finished at 150.17, just over that 18-day average. So the trend has a bias to it to the upside. The trend itself is up with higher lows, higher highs. The zone of support probably for the bulls is that 18-day average. What they would not want to see, in my opinion, taken out is 148.47. If that were taken out without getting back over 151.42, you could end up with then lower highs, lower lows, putting into play the potential for the 100-day and the 18-day average support to possibly be tested. This is your battle zone, the 18-day average, but give the bulls the nod here. In the hog market, momentum, as you can see, is trying to turn down now. This was a limit down close. My guess is the market didn't like to hear the U.S. going into another trade battle of one type or the other. Prices over 100, by the way, in hogs are a hard number to stay with, and that's been what the market's recently tested. If you take a look here, you got up to 99.82. And, excuse me, a lot of traders look at that number and they go, nah, that's a little bit rich. We'll see how the market does on pullbacks towards the 18-day average, but you can't get away from the fact you're just overbought. If you like what I do here, you're going to probably like what you see in the morning. What I try to do is get out. In fact, today I put out one of my updates at 6:07 a.m., one of my video update. The first one I've done from home. I've got work to do on it to make it sound a little better, but it gave traders the thoughts that they wanted. And what I'm doing there is prepping them for the morning trade. And with that, I'm telling them first if I see any fundamentals that they should be paying attention to. I'm assuming you're having a cup of coffee. And then in this exact sequence, each and every time, I cover these markets. So let's assume that you have an idea on the stock indices and you're looking saying, okay, we're getting a pullback, but regardless of what happens, I think things look good. Or let's assume tomorrow, and that's a good one to talk about in the foreign currencies, we have the European Central Bank meeting. What's the impact of it? What do the charts look like? Well, to get your morning going, I go in, look at the charts live, record my screen as it's going, and I'll throw out to you what I see the trade action, what I think the active traders or pros are doing in the market, what did the central bank, for example, do, the European Central Bank, and I will throw out trade ideas that might fit in with what you've been thinking yourself. And that's the idea here. Somebody to bounce an idea off of without talking you into a trade. That is the whole goal of that. The idea there is that you're looking at another way to do it. You think I don't do that? You're wrong. I wish more people had videos like I do. Most of them write newsletters, and which is great, but I really like to see the stuff moving on the chart. How do you find out more? Well, number one, let me tell you, it runs about 26 cents a day to get yourself started with it to see if you like it. You can go to our website, www.iraepstein.com. Under the word education or research, drop down to Ira's morning video. It explains itself and shows you what's going on. And again, you're not committing to anything except, hey, if you want to give it a try, $7.95 for 30 days. Come on. I'm Ira Epstein. Have a good day.